We have reduced this to 12 months between selection, the first validation, which should be around 3 months, the second adoption. They have to build with ethics and responsibility from the ground up. The product of insurance is changing because now we don't create only product for people like you. And then I realized this new world of FinTech. Personally, I would say the most important for a startup to scale first is to grow.
Hi everybody, and welcome to another episode of the Curiosity Code podcast. I'm your host, Alex, and today we're excited to welcome Sabine VanderLinden, a leader in InsurTech and corporate innovation. As CEO and co-founder of Alchemy Crew Ventures, she's helping insurers and financial institutions collaborate with tech startups to drive change and growth. Sabine has worked with over 150 ventures, co-edited the InsurTech book, and contributed to innovation research at Bain Business School. Sabine, it's great to have you here. To start, can you tell us a bit about Alchemy Crew Ventures and its mission?
Yeah. Thank you, Alex, for welcoming me on your podcast. So Alchemy Crew Ventures. So just to give you a little bit of background, I've been working for big corporations for a very long time. I've been in business for probably 28 years. And around 10 years ago, I decided to go and work with young ventures. I actually started with working with a FinTech startup. So I moved from working with insurance companies to helping build an InsurTech a FinTech startup as the chief revenue officer. I stayed there for 1 year, and then I realized this new world of FinTech. But I realized my industry, which is insurance technology, InsurTech, needed to get on the bandwagon as well. So in 2015, 2016, I left corporate. I left that FinTech, and then I started building acceleration programs. So I built Startup Bootcamp InsurTech in Europe. I also did the same in the United States, became really well-known acceleration programs. And so just before COVID, I decided it was time for me to do my own thing. So I built Alchemy Crew Ventures. February 2020, get started by stealth, and then you launch something like in June 2020. In the midst of COVID-19. And I guess the vision of Alchemy Crew is to help big companies to work with small ones. So we build what we call R&D and adopt labs to enable big companies to collaborate in an easier and faster way with young ventures. So I tend to work a lot with B2B, what we call vendors, scale-up startups, to actually start solving really important problem within my industry, which is insurance. And, it's not about talking about motor insurance or home insurance and travel. I look at the emerging risk, such as, longevity. When you look at the elderly, we look at problems such as climate resilience and sustainability, which is bringing more risk into the industry, right? We need to actually help businesses like yours and mine to be more resilient as we are affected by climate risk. Healthcare. So we tend to work with corporations to first help them look at big problems, and then also I would say industrialize and democratize the way they collaborate with young ventures, and do that in a different way than they would do it with vendors, because I think it's a little bit dated. The way they work with vendors. We want them to collaborate, to build partnership, collaboration. And so it's often why I don't call my clients, actually call them partners, actually.
I can totally, it resembles with me as well in my approach at Product Era. I have a number here, and correct me if it's wrong number. So you worked with over 150 ventures.
I have worked with over 150 ventures, accelerated at least 150 ventures for the past 10 years. I sit on boards now, but also I continue working with corporations. Yeah. So those 150 ventures mean that we have actually looked around the world for across 55,000 companies to solve those problems. So, you have a 1%, right? The 1% chance to actually map the right scale-up startup to an insurance problem, to a corporate corporate problem is very small. So you have to go through a lot of companies to actually find the gem amongst all the options which are out there. Yeah, 150 more this year.
Can you elaborate on one or two specific ventures in FinTech or InsurTech that you're particularly proud of helping scale, and what was your role in their growth?
So when you look at the way that the model works, so first, who is recruiting me to do the work is a corporate. So the process is corporate has a problem. Let's say they want to simplify processes. Now it's all about AI and generative AI. Mm-hmm. So they give me the problem, and then let's say they want to improve their claims process, and they actually want to improve their litigation claims process. So what we do then, we actually go and do what we call scouting. Right. And then source. So we scout across the globe for ventures which can actually solve that problem. That process may take 2 to 3 months, depending as to how deep the organization wants to go. For some of the initiatives we have worked with, we had to scout 3,000, 5,000 ventures over over a 3-month period. And mm-hmm. then, once you have done the scouting, you need to do the analysis, and then you need to actually knock on those scale-ups or startups door and said, do you want to have a conversation? So that takes approximately 5 months. So once we have done that, we will go and identify, let's say 10, 12 ventures. We then will want to collaborate with the corporate. So it's not just looking at the startup scale up. It's looking at the relationship between the two, between the corporate and the startup. So that is what I specialized in. Compared to me, let's say when I sit on an advisory board or I'm an NED for a scale up, it's usually, if it's an NED, I will have a role as compliance and audit and governance. And if it's mm-hmm. an advisory led role, it will be more around what I like very much, which is growth strategy. So go-to-market strategy and building probably marketing and sales plan to actually get their brand out there and start having the right conversation. So that is one side. But when I do a lab, then those ventures would enter what I could call an acceleration process, which now is called venture clienting, or the venture client model, where the corporates open their doors to having the startup, scale up to come into a process where they are happy to engage into a relationship. And what that entails is, it's my DIVA framework. So from discovery for investigation, then we go into validation. So we help the corporate to really validate that the venture is the right venture for the problem they want to solve for. So I was mentioning claims management, so litigation, right? We want to improve the way a corporate deal with case, which may result into a court situation, right? And litigation in court. What we need to do is validate that these ventures is relevant for the corporate by going through understanding the problem, having them communicate with the claims department, validating that they can solve the problem from the claimant. So you always have two sides of the coin, the internal the internal buyer, and then the external consumer, the claimant versus the claims manager. So we have to go through iterative process, test and learn of validating that the solution will be fit. So as you would do a proof of concept mm-hmm. or an MVP, depending as to how sophisticated the solution is and the maturity of the company. So we go through that validation process using, the internet to validate that the customer may want it, or internally going through business case validation to actually make sure that the internal buyer will want it. And once we have done that, we have to go through what we call an adoption process. So adoption means we have to literally implement the process. So I'm more like a project lead, a problem solver, helping the corporate claims team and then the scale up, the startup to actually communicate effectively and actually move fast through that process so that we don't want this engagement to last I would say 6 to 9 months. We need to actually start solving those problems and demonstrating the solution is going to be valid within 3 months. So once we have done that, if it works well, what you find is the scale up become adopted by the corporate. Literally, it's being implemented as a solution to solve the problem within the corporate. And it's a very collaborative framework. It's a co-creative, collaborative framework. So that's why I call them co-creation labs, venture lab, adoption labs, because both sides need to really quickly trust each other and want to work with one another to actually solve the client problem, which here he's a claimant. Once we have done that and we are happy with the relation, then I go into what I call activation and amplification. So what you will find probably on my social channel, when you find those really good relationships, I will be promoting the joint relationship through my channel for the corporate. And then the scale up. Why? I have spent a lot of time building my network within my industry. I use multiple channels. And whilst, we are in B2B, I don't need 1 million followers. I've been able to acquire over 120,000 followers through my work over the years. So that becomes a great awareness mechanism for the scale up to find a market. If they validate once within a corporate in one market, and then the corporate may want to continue to work with them in multiple markets, what you find is then that scale up is more likely to find new potential customers because now they have a great case study within one major big corporate. So that is activation. And then we amplify. And then, once you have done it, I would say the full year and then the scale up, startup is embedded within the corporate as a B2B solution provider. Then we try to scale. And then we want to scale this across multiple markets. Working with big companies, with corporates is not easy, right? It just takes time. Something which, could have taken maybe 2 years. We have reduced this to 12 months between, the selection, the first validation, which should be around 3 months, the second adoption, which would be 3 months. So you can get this done in 6 months, actually, nowadays. What you find is once you have done this adoption, the goal would be great results from the implementation, great KPIs, and then looking at scaling it across different markets as well. So that's the framework, in short. Or long.
Yeah. I'd like to steer a conversation a little bit towards AI-driven FinTech and step back into the process that you just walked us through and talk a bit about the adoption gap. So what specific strategies have proven most effective in bridging this adoption gap and fostering successful collaboration, again, especially in AI-driven FinTech solutions? I think you at this point, since you started before the COVID and you've seen kind of the process before the AI, all the whole AI thing started a year and a half ago. And now I think everybody is doing AI, and especially FinTech products also been powered by AI. Do you see any, change that's happening related to adoption? And again, I'm interested in any strategies that you may share that helped and showed as effective to bridge this adoption gap.
So since AI, November 2022, generative AI, ChatGPT, OpenAI come to market technically, but it's not then that started. This just happened that we moved from a situation where, people have been working in large language model. And in November 2022, those large language models were usable for people like you and I. And I'm not technical. So me, Sabine, not being technical, I can use the chatbot of OpenAI, the chatbot, chat with a bot and then get amazing answers, probably better answers I could actually come up in that short period of time. It would have taken potentially a long time for me to get some of the answers I can get today from some of those technologies which are there. Imagine, I read a lot of annual reports. Now I can just put it into the system and then get some question across 10 annual report and get some answers. I used to have to read, 5,000 pages to actually work out, how to build my strategy. in the following year. So what is happening, I think, with AI and generative AI is moved from technology office to business office. So make it more accessible to anybody. Now, when you look at the corporation, so you have two sides. You have the big players who have built their own AI, machine learning, deep learning teams internally. And so now they can actually see why they made the right investment and now they want to scale. And so what they are doing is definitely implementing AI and generative AI across a variety of processes to actually do two things, I think. First, to automate, right? Like RPA processes. It's just pure automation. You want to get a response or chatbot on the website. Now you don't have to just like do FAQs, right? You can have very interactive chats. And I think in the future, think about Amelia, we will be able to have avatars. We are going to talk to people and they will look probably nearly indistinguishable than a human. And so, digital humans are going to be really hot. So what are corporates doing? They want those because it allows them to drive that automation, but also that augmentation. So some will focus on the automation, others will focus on the augmentation of people. So having that human in the loop. And so and others will be focusing on two. So therefore, on the to automate and augment to therefore extend the way they can engage with customer. So what I've seen is, I would say some of the stats says that 95% of corporation will be adopting AI-based solution within the next 2 years. But 80% of employees are fearful of the usage of those technology. Now, I'm sure you are working in finance. I work in finance, highly regulated. And so what you find is whilst everybody wants to go into that AI bandwagon and adopt it, there is a lot of fear, but also there is a lot of regulation we need to be mindful of because of responsibility we have towards our customers. So responsible AI, ethical AI becomes really critical. And it's why we have seen in European Union, the AI Act and the principle being deployed to make sure that AI is explainable, transparent, it's unbiased, bias-free, non-discriminatory. So there are a lot of things that needs to be done to make sure that we can drive the transparency and still contain and keep the customer trust. So one of the main barriers to adoption is often trust. And what you find is today large corporations can be wary of new and testing technology. Everybody is excited about it, but they actually are worried because the minute it's badly deployed, and we've seen this, if you don't know, I'm saying with United Healthcare over the past few weeks. The reason why what happened, and I'm not saying it is right, is because the AI algorithm denied a lot of claims. So when you had acute pain claims, 90% of those claims would be denied, and less than 2% of people would actually try to fight the system to actually understand why the claims was denied. And when people have started realizing that it was a robot making those choices, they actually raised a lot of court cases. So now, as of last week, the US government decided to break down United Health, Cigna, the big healthcare players who are in the United States, owning 80% of market share. So I would say, so that is that fear, right? This impact on reputation that they actually need to maintain. So I think the first strategy often when you start thinking about adoption is co-creation. That's why, having the startup and scale up come into the organization and do test and learn and see how the technology works, going through the information security, the governance procedures. I mean, you cannot move to the next phase of adoption without having gone through all the legal processes and the governance processes within an organization. And so that is one of the things which is happening. So they're actually playing or developing things into a sandbox environment where they can pilot artificial intelligence solution on a small scale. The second part, I think, is how they, to improve adoption is how they go into partnership and collaboration. What is the framework where they sign the signal that they are welcoming growth ventures who actually are doing different type of artificial intelligence across the value chain, right? For us in my industry is how do I improve how I underwrite? How do I improve our price? How reduce my claims, how I engage better with the customer. All this is our use cases where we see AI being implemented. And so what you find is that partnership then force the corporation to look at strong stakeholder relations. So how do they actually make sure that the companies they are invited to share ideas and, in the sandbox, demonstrate the capability they have to offer, can actually become long-term partners. So you end up seeing for adoption to happen with AI to limit the risk of AI from a customer viewpoint, from a regulation viewpoint, from a reputational viewpoint. They have to look very much closely at do I trust that technology? Is it built based on good, responsible principle? Can I test the technology through co-creation process? Can I actually also build strong stakeholder engagement and also education? Are they willing to educate us to actually remove the fear within our employee base around the fact that, now it's not technical solution. It's I wouldn't say it's black box, but it's a business solution that is brought to the business users. So, I think there is a long way to go. I think there was recently a McKinsey piece of research or BCG, sorry BCG and sorry McKinsey if I am mixing who is whom, but I think everybody has done their AI report, is that insurance is probably, when you look at the adoption of AI within insurance, generative AI in particular is 10%. And I think the reason is because of regulation. Right. They have to be careful because of compliance that they are using platforms which are based on robust data governance and making sure that they don't get into regulatory risk and financial fines in the future.
Yeah, I think the cost of mistakes is also quite high in that industry because you're dealing directly with healthcare. But nevertheless, what are the most promising applications of AI you observed in InsurTech over this couple of years?
Yeah, but for me, it's across the value chain. So, I'm sure you probably played with some of the marketing applications. So I would say InsurTech, but, some of them are generic, AI platform. We used to use a lot Jasper, for instance, within my team. And we were a very early adopter of Jasper. I don't use Jasper anymore. I think when you start looking at the advancement of AI, a lot of the industry would actually create what we call private GPT. So they create a private instance of their AI or generative AI model on OpenAI. So OpenAI works with most big insurance companies, have created what we call private GPT, which allows the corporates to use a very strong large language model. So right. That is probably on the marketing side. But, Leonardo AI for pictures or Vid.io for video are, I would say the point solution. And often what I say is, when you look at marketing, you have all those solutions and we need to find some way to do orchestration with all of those. When you start looking at the root cause or, the pure insurance like trading in banking, for us is underwriting. You have amazing platform which allows, for example, underwriters to make their research much quicker to actually make a choice as to whether they are going to underwrite risk. So when you look at your business or you look at my business, instead of waiting 2-3 weeks to get a quote, now by just going online and checking what you do using generative AI, looking at specific risk question. So they are going to combine the internet data with the social media data, take out the noise, and then say, okay, I think this risk is a good risk. I think one of the great example is things about restaurants in the United States. You need to have a license if you are going to serve wine. And so imagine a restaurant saying that they don't serve wine, but actually you see wine glasses on pictures that people post on social media, right. Or you see actually based on the pictures that they have a bar, then you say, okay, they say they don't do liquor, but actually they do liquor. So that's a problem in underwriting, because imagine somebody coming out of the restaurant and they have an accident, liability, and all those things. So they need to rate for liquor licenses. So you have companies like, for example, Plank, a great company which actually use that data to give the underwriter the information they need so that they can actually underwrite the risk in 5 minutes, not 2 weeks, 5 minutes. In claims, I mentioned the litigation case because I work with a startup called Charlie AI. And so what they are aiming to do is looking at all the data available is helping the insurance settle a claim for the right price. So they are not eliminating the human. They're just augmenting the human work so that they can actually deal with the claims much faster, but then also enabling them and empowering them to look at the contract vis-a-vis the case, which is going to go on in the court, so that they are really well prepared to actually fight or settle the case at the best price. So those are, I would say, 3 examples. But I think when you start looking at AI and generative AI and how it's going to transform the operating model for any organization, I think we have a major problem around talent gap. We do not have enough talent coming in our industry. So I guess AI becomes really critical to help us still do the job without having all the people we need to go to do the job. But also, I think what you find is the roles that we used to have are going to change. For example, in underwriting, you will find ethical underwriters. So underwriters will have to make sure they underwrite without bias and discrimination. You are going to find ethical compliance officers who have to make sure that they check what the underwriter is doing so that the AI is not creating the algorithmic denial issues that we have seen in the United States. You will actually see also that, for example, brokers, people usually who are supporting the insurance value chain by literally explaining to the customer what they are buying. So they are critical in our industry. They become advisors. So they are going to use the AI to actually help them make recommendation much faster, not to 1 or 2 clients a day, but they are able now to handle 20 clients a day. So it's going to also create growth opportunities within the industry. But I think what is going to be most fundamental is the jobs of tomorrow are not the jobs of today. Every roles are going to change.
Right. Let's stop here and talk a bit about AI ethics in general, and from the perspective, not from the job market, like you just outlined, which totally makes sense, but more from the FinTech companies. In your opinion, what FinTech companies should prioritize when developing and deploying AI-powered solutions? Again, especially considering issues like data privacy and algorithmic bias, things that you already covered, but let's look at this from a little bit different angle, from the angle of people who are actually building these solutions.
I mean, the thing is, when you look at the FinTech or tech ventures building the solution, I think they need to build with transparency and ethics from the ground up. I don't think they have a choice. That's my view. And I know it's probably one of those situational question that different people will answer in different ways, because when you look at OpenAI, whatever you put in, well, you need to make sure you don't put client data in OpenAI, right? You actually put sanitized data if you are going to use OpenAI to make some of this assertion. So for me, when I look at the industry or technology providers building solution in finance, they have to build with ethics and responsibility from the ground up. Because at the end of the day, in Europe, we have the European AI directive, which are based, I think, on 7 principles, which requires for any business which actually is going to actually build an AI system, they have to meet specific criteria. And those criteria are really, I think, strict. Particularly when you are selling product and services to a customer, you have to actually be able to open the box and say, okay, how did you come to that answer, to that price, if the regulator comes to you? So I think when you start to looking at mission critical processes which have an interaction with the customer, which result either in a price or in a claim, you have to be highly ethical. Now, I would say marketing platform needs to be ethical as well, but you can actually use the data differently. They are going to take and suck the data from the internet to help you process the information and actually come with answers. So probably less important for marketing platform. Same for a chatbot support system. You know, they need to be careful that they understand the names. They need to be careful that they don't create bias and discrimination by interacting with individuals. So for me, when we think about FinTech, InsurTech, tech startups, that AI governance is critical if they are going to be working with large enterprise. And also we need to think about the liability. Think about, for example, autonomous driving. Autonomous driving is, our system which are driven by artificial intelligence, which where one day we may not drive a car. The car is going to drive itself. Today, we already have components of autonomous driving system in cars. So imagine you fall asleep in the car will be driving itself on the side to actually prevent an accident, right? So this is already there. But here is the other side is who is going to be liable if something happened. Today, if you have an accident, you are at fault. I am at fault if I'm driving. Tomorrow, if it is autonomous driving, it will be the manufacturer, right? And partly potentially the driver. Like a case we had just yesterday here in the United Kingdom, where it was a case which took place 1 year ago, where the young person was taken to jail for 9 years, where he was driving a car where he actually stopped the AI system to actually be able to drive at 100 kilometer per hour in a 30 kilometer per hour road, and therefore killed, I think, two young people as a result. He was fine, but he killed 2 people in the car as a result. So here he is at fault, but one day, if you are using the system properly in your autonomous environment, who is going to be at fault? We have not yet worked out. But what that means is the product of insurance is changing. Because now we don't create only product for people like you and I for when we buy or drive a car. We have now to think about the liability of the manufacturer which has used the artificial intelligence in their vehicle as well, and whether they are liable.
Right. Yeah, the phrase that I'm taking out here is make it transparent from ground up. I love it because so many cases these days when you're interacting with products, systems, and you don't even realize that it's AI powered. And it's weird sometimes when you figure it out by asking questions and getting answers that actually showing that you're not talking to a person while you are under impression that it is a real person.
Indeed.
I wanted to raise up a level of complexity of this domain a bit more, since you've had experience working in different cultures, UK, US, Singapore, France. What are the key differences you observed in these different regions, and what are the differences in their approach and innovation? Again, let's keep the context of the conversation limited to financial services, AI, and now we also have the cultural differences. We have regional differences. So what are your observations there?
So my observations are that, yes, Asia, I used to sit on the advisory board of the Monetary Authority of Singapore at some point in time. And I think very opportunities market, but it's very fragmented, right? Because you have Singapore, you have Hong Kong, you have all the small islands and all those things. So highly fragmented. So you have great innovation. And now I think it's in China, right? They have this greater Bay Area where all the innovation and AI being developed. I think what I love about Asia is because it's a very open market. You think about Ant Financial, right? You end up see a lot of the innovation and digitization coming, and then we have to learn from Asia, because they have come up with so much solutions which have revolutionized payment. For example, think about Grab in the way they do the delivery of food, but also how they enable the rental of a vehicle, as much as the Uber, right? Your Uber of Asia. When I look at Europe, I think the Europeans are more cynical, but also very strategic. And so I always say, for example, to startup and scale-ups, when you look at investment, it's very rare you actually find a startup or a scale-up able to sell a product from a PPT. You find that in US, right? Still today, investors will buy an idea without having a product behind it. They buy the people. In Europe, it's less likely. And also investment size is much smaller. US, I think, is much more, not only transactional, but also much more opportunistic. So when I work with the US corporates and startup, I think it's much more transactional, as I said, and it's also much more product centric. So when I actually, my experience working on those three markets is usually US is very much about the product to solve a problem. So I need to improve my, underwriting process. I need to improve my claims process. I need to improve HR, legal. So it's very functional and very product centric, transactional, I would call it. Europe is probably going more into the product and service angle. And when I look at the three horizon model, right, efficiency, innovation being horizon 1, product and service innovation being horizon 2, and business model innovation being horizon 3. So the McKinsey through horizon model, I think European probably sit between 1, efficiency, 2, product and services. But as they do more and more product and service innovation and efficiency innovation, I think that we are going to reach a point where we are going to do business model innovation with AI. What is the AI powered insurer? What is a predictive business model where everything is run by AI? Is that possible? Right? Remembering our regulatory conversation and compliance conversation and needing that human in the loop. So that is the difference. I think Europe, every country in Europe is unique. It doesn't, if you are able to sell in Portugal, Spain, Italy, doesn't mean you are going to be able to sell in the UK. But right. I think if you do Portugal, Italy, Spain, you are more likely to sell in France, for example. When you do sit in Germany, Holland, UK, so you see what I mean? It's fragmented and you really need to understand your market. The US is big, but every state is different. In our industry, you have to register your company in every single state. So it's 50 registration. So partly strategic, Europe, fragmented Asia, but a lot of innovation is so interesting in Asia because you can learn from it and bring it in Europe. US, for sure, they are the leader from an investment viewpoint, but because it's very transactional, I think it's why you have a lot of transaction. I think today there is 10 billion Databricks received 10 billion investment. That is incredible, but it's because of AI, right? Think about NVIDIA, the chips and so like, so very transactional, very product centric.
So, looking at, again, a little bit higher level, like global perspective of FinTech landscape or InsurTech landscape. Which regions, in your opinion, or countries do you see as emerging hubs for innovation, and what factors are driving this growth?
Emerging hubs, the main emerging hubs or the main resistant hubs still remain Silicon Valley and I would say New York. Emerging, I think, because Silicon Valley is so expensive, you have people moving into Miami, and the mayor of Miami has been really welcoming to international startup, international people to come and build businesses there. It's been very, very welcoming over the past few years. Now in Europe, I think you still stick to Berlin, and the UK. UK still, 14% of the startup ecosystem comes from the United Kingdom. But I think, when I look at the work I'm doing with some of the corporates I work with, Switzerland is not too bad, it's growing. And also Düsseldorf in Germany want to actually build their own ecosystem. So those are some of the interesting emerging part of Europe, but for sure, when you start looking at where the startups are in Europe, it's UK first, Germany and France, I would say second, around 5%. And then it will be Italy, Spain, and Portugal at 1 to 2%. Now, Asia, I would say Singapore and Hong Kong. I mentioned the Greater Bay Area. With no surprise, China wants to be the place for innovation in Asia, and they have actually regrouped everything on like a little island, right, called the Greater Bay Area, and all innovators, all tech funders tend to go there to actually make sure that they have the ecosystem around them to help them, to build their business, but also to have a bit like Silicon Valley, right? To have the diversity of thought around them to be successful.
Right. It's still, there's so many hubs. There is still no like a single place in the region that drives it. I think that's what's happening these days, right? It's not really centric, and I'm happy about that. The more differences we have, I think the better the community is, the more innovation is being created because of these differences.
100%.
I want to start slowly to wrap it up and steer a little bit back to your current company, Alchemy Crew Ventures. And since most of our audience are people who are building something in FinTech, and they are obviously looking for some guidance, help, funding. There are many different ways how funds help startups and scale-ups. So beyond funding, what kind of support is most valuable especially for early-stage FinTech startups to help them scale and succeed? And maybe you can give a couple examples based on your experience at Alchemy Crew Ventures.
Personally, I would say the most important for a startup to scale first is to grow. So you need to grow before you can scale. And I think often founders focus so much on, first step, and then immediately when they get funding from investors because they have the pressure of the investor, they have to scale. And I always say to them, make sure you have grown, you have the right process, the right team, and the right strategy in place to actually be able to scale, right? To be able to scale, you have to make sure that you have the right strategy, you have the right people supporting that strategy, and then you have the right systems and technology. So system, technology, and processes helping you to do that. So when we tend to work with, and often young ventures do not do much around their go-to-market. Don't take me wrong. I respect the fact that everybody is busy, but it's very much about focusing on the product. And then imagine you have the greatest product, but you have not marketed it. And so then when you start knocking on doors, you don't have any response, and you get really frustrated that no one is responding to you because you have not thought about building that go-to-market and then marketing a strategy to enable people to gradually understand what you are about. So for me, first is, I'm going to talk about really amazing framework that all of us have been using at, startup, architect, provider, growth supporter, would be first, make sure to be clear around your business model, right? How you're going to make money and how you are, you're aligning your cost. Because on one side is the customer, the channel, and the proposition. On the other side is the partnership and the operating model and the cost structure. Mm-hmm. Then it's the value proposition. At the end of the day is what are the, the pain and the gain? What are the problems you are solving for the industry you are after or the customer within that industry? And so really be crisp and clear about that value you are providing, those customers within. So for me, it's business model and value proposition. And then it's about continuously testing. So iterative test and learn to actually make sure that the product is always aligned to the market. With the speed at which generative AI is moving, startups, as I said, I was using Jasper. I was probably one of the first user of Jasper. I don't use Jasper. And the main reason I had to get off Jasper was I didn't get the answer I needed from that platform anymore. And my team stopped using it. So at the end of the year, like now, right, check usage and said, okay, not use, kaput. it's gone. The technology disappear from the portfolio because if they are not using it, they don't need it.
Right.
So for me, right, business model, value proposition, iterate and learn, and grow before you try to scale would be my advice to scale up, which are there. But then once you have that in place, remember you have to do a little bit of marketing every single day. Build your profile, build your personal brand, share your experience online, because this is the world we are in today. And, it's interesting. I remember a friend of mine, as we were talking about that, she said to me, Beyonce said once, even I need to do marketing. You see what I mean? Even I. And the lady is pretty well, well, but she said once, even I need to do marketing. So imagine if she needs to do marketing, it means all of us need to think about how we build our personal brand.
Thank you very much, Sabine. It's a very insightful conversation. I appreciate you being a guest at our podcast.
My pleasure, Alex. Thank you for having me.
And thanks for the audience for listening. And don't forget to like the episodes and subscribe if you're not yet. And see you next time. Thank you. Bye-bye.
Bye-bye.